Thanks for joining me this Friday, the 19th of September. I'm Grady Senior Market Analyst with Bell Direct, and this is our weekly market update. Commodities have been a mixed bag over the last 12 months, with copper and gold running red hot, while lithium remains in a depreciated price environment, and uranium has re-emerged as a front runner amid the green energy transition movement. This week, I sat down with some of the industry's mining magnates and newcomers to discuss the outlook for key commodities at the Resources Rising Stars Conference for 2025. From a hybrid mining services and operations business to a major gold discovery in Western Australia and even across the world to assets in Canada, I asked the executives key outlooks on commodities and updates from the helm to deliver this very special edition of our weekly to you. I first sat down with mining magnate Tim Goyder, the chairman of Minerals 260, ASX, MI6, and leader across many boards, to discuss how MI6 has strategically navigated the gold run with its recently acquired Bullabulling Gold project in Western Australia.
But at the end of the day, you've got to look at reality. What is today? Why is the gold price so strong? And it's I think it's two-pronged. The world is worried about, of course, the US dollar and the US debt, and the political situation around the world has never been unpredictable so much, hasn't it? Like it's the man in the street is buying gold, and governments and sovereign funds are buying gold.
Exactly.
So, look, I'm not that great at forecasting. All I know is that we want to have an asset which will survive in the cycle. I looked at the project and we did a lot of DD over that 6-month period, and we could not find any fatal flaws.
Wow.
And I guess we wanted to be in the position like an investor to look at it and say, what can we do with our company? It's about growing a company, and we're on the path to do that now.
Yeah.
So. It was a $30 million capitalised company, and we went and raised $220 million.
Amazing.
And I think about that now and say, well, God, how did we do that?
Yeah.
But look, it really came down to the asset.
Yeah.
Yeah. And ultimately, we presented to some major institutions around the world, and we're very fortunate to have them on our register now.
Develop Global has been on a tear recently after announcing strong production results at its Woodlawn copper zinc project in New South Wales, with the company progressing rapidly towards steady state production aimed for early 2026. Managing Director Bill Beament explained why the copper run still has a long way to soar and how Develop's Woodlawn asset plays a key role in fulfilling the upcoming supply side deficit of this critical mineral.
We obviously picked the asset really cheaply out of administration. It was built brand new, so it needed some fine tuning and upgrading, and we finished all that work in April. So we upgraded the processing plant. We put a lot of money into the underground, getting capital development in, drilling, mine life extensions, and a mine plan with a 10-year plan on it. And then financed that at the end of last year and kicked off that refurb late last year, early this year. And now it's full commissioning is well advanced. The processing side is well advanced. The mine is now starting to produce, and we're ramping up until the end of this calendar year, and we're steady state from the start of next year. So that's the part why I changed commodities, is I can see a train crash coming.
Exactly.
And I was saying to someone out in the booth today, is we need copper just as much as steel and iron ore.
Exactly.
So it's just as important for the building blocks of society moving forward, and I just can't see where it's coming.
Yeah.
We're pretty privileged. We've got some amazing relationships at the upper echelon in the copper game, and I know what the incentive price is. They tell me, and these are the people that control the market.
Yeah.
Like it's $6 to $6.50 US a pound.
And we're about 4, so
correct.
That is insane.
So we've had these jumps, like gold's jumped 100% in 12 months.
It's ridiculous.
Iron ore years ago went from 20 to 180.
Yeah.
Lithium went from 500 US to 8,000. Copper hasn't had it.
And it's conservative saying $6 per pound because it's at 4 already. So, and everyone's talking this equilibrium is going to be so far disrupted.
Yeah, but you haven't woken up and had that 50 or 100% jump in copper. It's just crazy. It's going to happen.
2 newer names to hit the market in the gold space, also making waves in recent months, are Arika Resources, ASX, ARI, and Gorilla Gold, ASX, GG8, for their gold assets in Western Australia's Gold District and Canada.
We're fairly new to the market in that We've acquired two really exciting projects in the Leonora-Laverton area, one of the hottest gold districts in Australia.
Yep.
And we actually sit on two bits of tenure that essentially haven't been explored in 30, 40 years, had no modern exploration, yet both projects have had significant high-grade historical production. We've actually just started systematically and methodically working through drilling exploration, and we've been hitting some amazing results. We've got eyes on us from everywhere. All the big boys around us, Genesis, Northern Star, Anglo Shanty, all around us, Bright Star, they're all keeping an eye on us because of the grades we're getting.
We are a fast-paced, high-grade gold exploration and growth company operating in WA. So our main focus is WA. We currently have 4 rigs operating at the Comet Vale project. So all of our gold projects are ex-high-grade gold mines. They're all on granted mining leases. They're all close to infrastructure, that's milling infrastructure and transport infrastructure. And fundamentally what we're doing is rapidly growing resources and moving these projects forward into a position where we can then think about what to do with them. So far this year, we've added 650,000 ounces at about 4 grams. It's actually in the last 6 months we've done that, with much more to come.
And a copper gold project has fueled a 30% share price rally this year for Firefly Metals, ASX FFM, as investors buy into the high-grade critical minerals deposits owned by FFM in the attractive Newfoundland region of Canada. With an aggressive drilling strategy, there's an exciting 12 months ahead for Firefly, according to Executive Director Mike Naylor.
We've got a world-class deposit, copper gold deposit in our flagship Green Bay Copper Gold project. It's got 60 million tonnes at a very high grade, 2% copper equivalent. We've got 8 drill rigs going. We're in a fantastic jurisdiction and we're certainly advancing it very quickly. It's probably one of the most active drill campaigns in North America at the moment. So we've got 4 drill rigs concentrating on infill drilling, which will be once again getting that measured and indicated up to a level that we can create a study that's really robust. We've got 2 that's growing the resource. Our last resource update, we increased the resource by 51% from 40 to 60 million tonnes. We're drilling down plunge at that and we expect resource growth, probably not at that level, but we're certainly going to see it grow. And then once again, the regional prospectivity, we put our first 2 holes down on a regional campaign under an old mine, and we got 10 metres at 6% copper and 12 metres at 4% copper.
As for what to watch in FY26 on the commodity cycle front, those at the helm see gold's run is set to continue with central bank buying, interest rate easing, and safe haven nature of such investments fueling strong tailwinds for this precious commodity. Copper is also expected to continue running as we face a critical supply deficit against mounting demand for the critical metal. Uranium's role in the green energy transition is also anticipated to continue fueling the spot price momentum for the commodity, while lithium's depreciated price environment may recover sooner than we all think, all according to the executives and analysts that attended the conference this week. Locally, from Monday to Thursday, the ASX 200 posted a 0.68% loss as a sharp sell-off among energy and healthcare stocks offset strength among the tech and utilities sectors this trading week. Investors have also been cautious to start September as macro uncertainty remains elevated. The winning stocks on the ASX 200 were led by Nuix, soaring over 21%, while Liontown Resources and Pilbara Minerals, our lithium producers, gained 19.85% and 16.24% respectively. And on the losing end, Santos tumbled 13% after its takeover deal fell through this week, while Austal ended the week down 8.92%. On the broader market index, the All Ords posted a 0.45% decline as PYC Therapeutics tumbled 26.64%, while Race Oncology rocketed 62%. The most traded stocks by Bell Direct clients this week were Samphire Resources, Mineral Resources, Wagner's Holding Company, Phineas Company Corporation Holdings and BHP. Clients also bought into CSL while taking profits from the big banks in CBA, ANZ, Westpac and NAB. And the most traded ETFs by our clients this week were led by Vanguard Australian Shares High Yield ETF, Vanguard MSCI Index International Shares ETF and Beta Shares Australia 200 ETF. On the economic calendar front next week, we may see investors react to a slew of data out of the US, with durable goods orders for August, GDP growth rate for Q2, existing home sales for August, core PCE price index for August, personal income for August, and personal spending for August, all released later in the week, which will give a greater insight into the health of the US economy. And that's all for this Friday. I hope you have a wonderful weekend, had a great week, and also happy investing.